Welcome to the Property Corner with myself, Rowan Alexander. Welcome back to the First Time Home Buyer series, and in this episode, we'll be talking about the additional costs of home ownership. So if you've been following our series up until now, you would have heard terms like transfer costs, bond registration costs, even mortgage initiation fees. These are fees which I think you become familiar with when you're looking to purchase property. These are the spoken terms, the ones that everybody communicates up front and is on the tip of everyone's tongues when they're buying property. But there's also costs involved with home ownership which you tend to forget about or you're not aware of, and these are often referred to as hidden costs. Countless times in my career I've been in a position where someone says, well, we didn't know about these fees, or we never budgeted for these fees. And I want to shed some light on what these what would be regarded as hidden fees could potentially be. When you become a property owner, whether you've been renting or living with someone else and you haven't been a property owner before, there will be costs that you're going to incur which you've never incurred before. Things like municipal accounts. As a property owner in South Africa, you are required to pay tax on your property. The tax is determined by the value of your property and taxed proportionately. This could be as little as 300 Rand a month, and it could be as much as 5,000 Rand a month or more, depending upon the value of your property. But as a first-time buyer, property taxes are something which you need to take into account. You'll be billed them monthly by your local municipality, and they will be payable. Along with those bills, you'll typically find your consumption charges. So things like water, refuse removal, your sewage costs, those will be added onto that bill. In Cape Town at the moment, for a property of about 3 million Rand, that bill could easily be about 1,500 Rand a month. So that's something which you need to take into account. In addition to that, insurance. If you're going to be purchasing a property, number one, if you're financing that property, it's a legislative requirement and a requirement from the bank that the top structure, the home itself, is insured. You can just imagine if that house burns down, and you're still owing the bank money, they need some form of security. And that's where property insurance comes in. Insurance is something which is very often overlooked, and people forget that they or just simply not aware that they will need to insure their property. Property insurance is not an expensive exercise. It could be if we stick to the 3 million Rand example, it could be as little as 500 Rand a month. But adding the 500 Rand a month to the 1,500 Rand property rates and taxes account, you can see that there's already 2,000 Rand a month for which you need to make extra provision. Having not owned a property before, you may very well not be aware of them. And engaging with a property professional, they may share this information with you, but very often the conversations go in the way of, what are my transfer costs? What are my bond registration costs? The big values, and the small values are often neglected. They'll be somewhere on the advert, and you might have spoken about them before, and you might actually chat about them, but you tend to forget about them. Another additional cost of home ownership, which we often get questioned about, is levies. Levies can be for two reasons. You could either have purchased into a homeowners association, where you are a homeowner within an estate, and you own your own property, and you own it wholly, but you contribute towards shared facilities. These shared facilities, if you look at a traditional security estate, simple ones would be the parks, the open parks, the gardens that sort of along the road, the gate, the electric fencing, the electricity, sort of to keep those light bulbs on, and the irrigation to irrigate the parks. There's costs that are shared by the homeowners in actually keeping those things going. And for that reason, a levy needs to be raised, where every owner pays proportionately, depending upon either the size of their home, the value of their home. HOAs will have different ways to do that. It could be a fixed fee, or fixed allocation. But you would pay a levy as a homeowner in a shared estate, an HOA, contributing to the shared costs of those facilities, the shared facilities. Now, often people say to me, "But Rowan, I don't want to be paying these levies. It's why do I have to pay levies? And it's just an additional cost." Remember, if you are a homeowner not within an estate, you would have these costs in any way. You'd have them in any case. If you have an alarm system, whether you're paying your alarm company outside of an estate or whether the security is included in your levy, the maintenance of the gardens, whether it's included in your levy or you're paying it, sort of elsewhere, you're getting that benefit. Sure, it might not be at the same price that you're going to pay individually, but you are getting the benefit of that levy. Levy in a HOA, in a homeowners association, is something which you need to account for. The second type of levy you may have is when you buy into what we refer to as a sectional title scheme. Most easily identified sectional scheme properties are apartments. In South Africa, our legislation makes provision for you to own a portion of a building with our Sectional Titles Act. So in a sectional scheme, all the properties are built on a single plot, on a single earth number. But every individual unit or every individual part of that building is owned separately. In this instance, you'll also be required to pay a levy. This would be in the form of a sectional title levy, not a HOA levy. That's something the one that we've discussed first. This is a different type of levy, and you wouldn't incur both. You would have either or. In a sectional title scheme, your levies would typically be slightly higher. And the reason for that being is very often, and in most cases, in a sectional title scheme, your levy will be inclusive of your property insurance. If you have two buildings next to each other that share a wall or a roof structure that covers one big building with multiple properties, who's responsible for that roof? Who's responsible for the staircases, for the walkways, to get to your property, to access your unit? These would form part of the shared ownership. So everybody owns it, but it's not, you don't own those 5 square meters and the next guy that 5 square meters and the one the staircase and the other one the parking. They're all owned jointly, but it's what's referred to as an undivided share. But the maintenance costs of those shared elements, in the same way that they would be shared by all the owners in a HOA, they will be shared in a body corporate. Every owner forms part of that body corporate, and they will all contribute, again, in some way, whether it be in the floor space factor or whichever accounting method they use to actually allocate that or determine that levy. You will pay proportionately. The big difference between a sectional title levy and a HOA levy usually is that the sectional title levy will include your property insurance amounts already. And that is because you as an individual, the unit owner, will very often not be able to insure the common property, the single roof over the entire building. The geysers sit in the top floor, but they're being used at the bottom. There'll be one single policy for the building, and it will be shared among all the owners in the building.